Hello and welcome to Core Finance with me, Matt Brown. I'm joined by Nicole, Elliot, who is an investor and a technical analyst and an all-round market sage and guru, if you don't mind me saying.
Wow, that's quite an introduction. Thank you, Matt.
You're welcome. So first slide of the day, we're looking at the dollar index. Now, it seems that no one loves the dollar at the moment, but just talk us through your chart.
Yeah, well, this is a monthly chart, Matt, and I've been looking at this for quite some time and suggesting that the post-Trump victory was like a little extension to a well-established trend. And you can see that really since 2008, one way or another, the dollar has strengthened, and it has retraced, it's hit a retracement level there, 61%, that red line at the top, from the all-time high, it was actually 1985. Anyway, that little blip up there hit that secular trend line, and whoa, there we go. Both. End of story. And we've now dropped 11 big figures, which is 10% of face value. And I think you'll agree that that is a significant amount to have achieved in a major currency over a 7-month period. It really is quite something, and it will start to hit the wallet where it hurts. Now, more interestingly, really, on the chart is that we're testing this horizontal line at 93. The dollar index is a basket of currencies, of which over half is the euro. So, in other words, it's a different way of looking at a euro-dollar exchange rate, really. And that 93, you can see, has been support since the beginning of 2015. So it matters. It really does matter. Now, my hunch is that we're going to break lower. And on a weekly close below that, that'll be your first red light warning that, you know, you really got to do something about the assumptions that you made in January, which are patently incorrect and dangerous going forward. Now, you're not completely out of the water because we have dipped briefly below that 93 level and then closed on the month just above it, sort of scrambling. So, you know, there is a chance still. And then you've also got that horizontal retracement support at 91, 38%. So, you know, you've got that sort of little sort of will it, won't it, no man's land. But my view is that it will go down, and it will go down quite a bit more, because those three peaks that are sort of like ascending highs, they're not perfect, but they're not bad, are they? It's like a broadening top chart pattern. That's what we call it. Yeah, a broadening top. Third time lucky? No, not at all. And so how far down can we go? Well, roughly the same amount as we've lost already. So,
That's
yeah, exactly. Now, obviously, you've got levels on the way where you might stall, like the 50% level, you know, halfway house between, you know, when all the banks were imploding and then when the point where everything is rosy in Euroland or whatever. You know, you might have something there. But I do think that another 10% would really, because that would be a 20% decline. I mean, that is really going to hit where it hurts, which is what happened to cable. Yeah, on Brexit. That is the sort of effect that you potentially could have here. Not by year end, but
it'll be the same pace, or do you think this decline will start to slow down?
I hope so. I hope it'll be slower, because otherwise it just makes it so difficult for businesses and that to try to do their financing and their forecasts and their budgeting. You know, it makes life very hard. Yeah. So, but that's the sort of thing that I think we might have to face.
Okay, well, let's hope it doesn't put us into big financial turmoil. Thank you very much for joining us today.